Sure. So there are quite a few high-quality liquid alternatives funds out there. We think we're one of them. We hear from our clients, our investors, that the fact that we have the risk overlay program, the ability to change the risk profile of the fund at the portfolio manager level, independent of allocations to the managers, we think that that risk overlay component is a very nice differentiator versus our peers. One other area that some investors quite like is that we are a fund of separately managed accounts. We're not directly trading the individual securities. We're allocating to a diversified set of managers, 14 managers. And we really are allocating to these managers through a separately managed account. So we see all the positions, we see all the transactions. We have very high transparency. Investors seem to like that about our fund. Sure. So hedge strategies like the K2, Franklin K2 Alternatives Fund, they tend to do very well in terms of performance when oftentimes the bond market is declining in price. Maybe interest rates are rising a bit. Another area of the market environment that tends to favor hedge strategies is the steepening of the yield curve. We actually think the yield curve might steepen in the next 12, 14 months. And then the final area that tends to be very positive for hedge strategies is when we see sector rotation, when we see different sectors that have underperformed for years start to see some earnings growth improvement. And very similar to what we saw in the first half of September, we think that's going to be ongoing, and that sector rotation could be a big tailwind for performance. Well, hopefully we would adjust the beta before any recession. But yes, we're quite dynamic in terms of not only shifting the allocations between different managers and strategy buckets. We will move towards a more growth-oriented profile if we think that the global economy is doing quite well or recovering. We'll shift, as we are now, to a slightly defensive posture where maybe global growth is a bit below average. So in terms of our beta sensitivity, it does move around. It can range between maybe 0.10 beta sensitivity to US equities. And I think since inception, it's been as high as 0.35 beta sensitivity. I don't believe we would ever get the beta below 0, but we can get the beta very close to 0 and let the active hedge fund manager alpha remain in place. Yeah, sure. Well, it definitely depends on quite frankly, their age and their risk profile, their overall portfolio. I will say that for an older investor at the approaching retirement, where they want a bit lower volatility than equities, maybe a higher expected return than the bond market, given how low interest rates and yields are, we're seeing more and more of the older generation investors sell some of their bond holdings and add to liquid alternatives. The younger investor probably should be more tilted to equities. It really depends on their individual situation. Maybe the younger investor is not as interested in liquid alternatives and hedge funds. But as the demographics get older, we're seeing more and more acceptance of hedge strategies.
投资一定有风险，基金投资有赚有赔，申购前应详阅公开说明书。